Most people spend their lives working for money, trading time and skills for it, yet few truly understand what money is or where it comes from. We assume money is a fixed, tangible thing printed by the government, but that's not the full story. Money has evolved from hard assets like gold and silver to something far more abstract. Gold and silver were once valued for their intrinsic worth, but they were cumbersome for growing economies. Paper money emerged as a claim on gold, introducing a layer of abstraction. The gold standard tied currency to gold, providing stability but limiting flexibility during crises. Eventually, governments needed more control, leading to fiat currency, money with value because the government says so, and people believe it. Today, money is mostly digital, existing as numbers on screens, not physical bills or coins. It's a social construct, built on trust and promises, not on tangible assets. The vast majority of money is created and moves through the banking system as digital entries. Understanding this shift is crucial to seeing how our economic world really works. Money is no longer a hard asset, but a system of credits, debits, and trust. Most of us work for something we don't fully understand, but understanding money's true nature is the first step to navigating the modern economy. For centuries, money was physical, gold and silver coins, valued for their scarcity and durability. Carrying heavy coins became impractical, so people deposited gold with goldsmiths and used paper receipts as money. These receipts, backed by gold, became the first paper money. Governments formalized this with the gold standard, tying currency to a fixed amount of gold. This system disciplined governments, preventing them from printing too much money. But in times of crisis, like wars or depressions, the gold standard became a straitjacket. In 1971, the US severed the link between the dollar and gold, ending the global gold standard. Since then, all major currencies have been fiat, backed only by government trust. Money is now a promise, not a physical asset. The shift to fiat currency changed everything about how money works. Our financial system is now built on trust, not gold. The era of hard money is over. We live in a world of promises and faith in institutions. After the gold standard ended, money creation changed dramatically. Most money isn't printed by the government. It's created by commercial banks when they make loans. When you get a loan, the bank doesn't move money from someone else's account. It creates new money with a few keystrokes. That loan appears as a deposit in your account, money that didn't exist before. Every loan creates new money. Every repayment destroys it. Nearly all money in our system is created as debt. The banking system's willingness to lend and the public's willingness to borrow determine the money supply. Banks are the primary engines of money creation. Our economy's health is tied directly to the expansion of debt. Money is not just a medium of exchange, it's a system of credit and debt. Understanding this is key to understanding the modern economy. Banks create even more money through fractional reserve banking. They're required to keep only a small fraction of deposits in reserve. The rest can be lent out. For example, with a 10% reserve requirement, a $100 deposit allows $90 to be lent out. That $90 gets deposited elsewhere, and $81 of it can be lent again, and so on. This process multiplies the original deposit many times over, a phenomenon called the money multiplier. The central bank's reserves support a much larger money supply, all created as debt. The system is elastic, expanding and contracting with economic demand, but it's also built on a small foundation, leveraged many times. Fractional reserve banking amplifies the impact of every dollar in the system. Most of the money in circulation is created this way. The entire structure relies on trust and careful management. A little reserve becomes a lot of money, fueling the modern economy. Creating money from debt has major consequences. The money supply is almost always expanding, because debt must grow to pay back both principal and interest. This creates constant pressure for more borrowing and more money. The result is inflation. Prices rise as more money chases the same goods. A little inflation is intentional. It encourages spending and investment. But the need for ever-expanding debt means the economy must keep growing. If growth stalls, debt becomes harder to repay, leading to defaults and economic contraction. This can trigger a deflationary spiral, as seen in the Great Depression. The system demands growth to avoid collapse. Households, businesses, and governments are on a perpetual treadmill of borrowing. This cycle creates booms and busts. Easy credit fuels growth, but tightening leads to recession. Our economy's ups and downs are driven by the dynamics of debt and money creation. Understanding this cycle is crucial for anyone navigating today's financial world. The money creation pipeline starts with the Federal Reserve, which creates base money, physical cash and digital reserves for banks. The Fed injects new reserves by buying government bonds, adding money to the banking system. Commercial banks then multiply these reserves through lending, using the fractional reserve system. Most of the money you use is created by private banks as loans. The Fed influences this process by setting reserve requirements and interest rates. You interact with this system every time you borrow, use a credit card, or deposit a paycheck. Borrowing creates new money. Repaying debt destroys it. The money in your wallet is the end product of this complex chain. It's not an asset like gold, but a claim on value, a liability on someone else's balance sheet. This system is built on trust, in banks, in government, and in each other. Inflation, interest rates, and economic cycles all flow from this process. Understanding how money is created helps you navigate the financial world. In the end, money is a system of trust, debt, and belief, shaping every aspect of our economic lives.
Thanks for watching. Like and subscribe for more videos like this.